Make sure you guys get your 5 stocks from Moomoo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Literally free money, guys. Link down below. And now let's talk about this massive news that came out today. Stocks, what the markets are doing now. So hit the like button, subscribe. Let me know your thoughts down below in the comments. As always, I love hearing from you guys. Drop me a comment down below. And now let's talk about what the heck is going on, because the markets are selling off again. It's currently 12:45 p.m. on the East Coast. We have the S&P and the Dow down about 0.7, 0.8% each. We have the Russell down 0.6%, and we have the NASDAQ down over 1.3%, as the VIX is up 1%, and we have the metals moving up as well. Silver's up 0.9%, and we have gold up 0.75%. And not to toot my own horn, but take a look at this 20-day chart on SPY. Did we not call this out these past couple of days? I've been saying, guys, be careful. SPY is not yet breaking out, and Triple Q for that matter. It's not yet breaking out of the 180 moving average on this 20-day chart, and lo and behold, we are getting rejected exactly at that point today. I mean, look, earlier in the pre-market, SPY was actually up. We actually got up to about 447.75, which, mind you, is not only the 180 SMA resistance on the 20-day chart, but 447 is roughly the resistance from yesterday. So we failed breaking out of yesterday's highs, and now we're dumping, and we actually took the lows out from yesterday. Not a good sign. The intraday lows from yesterday on SPY were about 443. Now we're clearly trading under that. So this is not looking good at all for the bulls on the intraday chart, the 5-day chart, 20-day chart. SPY looks like it could very well go lower here. Same thing with Triple Q, right? We got rejected by the 180 SMA on this 20-day chart. And again, I called it out, not to toot my own horn, but I did call it out. And on the intraday chart, you guys can see we are now, actually, let me pull up the 5-day chart. We are now under yesterday's lows. Yesterday's lows, intraday lows, were about 352. Now we're trading in the mid 351. So bulls are losing steam. Bears are slowly gaining control. And that's kind of what I'm seeing. That's what the technicals are telling me. So what do you guys think about the markets? Drop me a comment down below. And now let's talk about Google, because Google today announced some crazy news that sent down a lot of these social media stocks like Snapchat, Facebook. I don't know if Facebook's getting hit directly because of this, but Snapchat is getting hit. So let's talk about what Google is doing. Let me pull up Google's stock chart while we're at it. So Google announced it's adopting new privacy restrictions that will cut tracking across apps on its Android devices. And if you guys didn't know, Google owns Android, right? So they're doing kind of what Apple did, and we'll talk about that in a couple of minutes here, so make sure you guys stick on throughout here. It is developing new privacy-focused replacements for its advertising ID, a unique string of characters that identifies the user's device. The digital IDs and smartphones often help ad tech companies track and share information about consumers. And if you guys have realized, these days, recently, I don't know how recent this has been implemented, but I have an iPhone, right? And when you download an app, it asks you now for the most part. And I don't really download a bunch of apps, but whenever I'm trying a new app out or something, whatever it may be, it says, do you want this app to track? Do you want to allow tracking or not? And I typically say no, but at least you have that option now. And I'm not sure how long that's been a thing for the option, but it is nowadays, so that's a good thing, right? And we got some a word here from the Google Android Vice President of Product Management. He said, we realize that other platforms have taken a different approach to ads privacy, bluntly restricting existing technologies used by developers and advertisers. He said, we believe that without first providing a privacy-preserving alternative path, such approaches can be ineffective and lead to worse outcomes for user privacy and developer businesses. And I believe they're doing like I don't want to say a grace period, but a 2-year period of time for these different apps to adjust and so forth to these new policies. So I guess that's a good sign, right? And focusing on privacy practices could help the tech giant get ahead of regulatory issues as lawmakers and consumers become more aware and concerned of their personal data. Like I said, now we're able to decide whether or not we want this or that or this app to track this or that, right? The company said this today. It's going to be working closely with regulators, and this happened with Apple and Facebook, right? They've been going at it. They hate each other. Let's be honest. Meta said earlier this month that it expects Apple's ad tracking changes to cost it $10 billion in ad revenue in 2022. And that is a reason why Facebook stock is going down, and it went down after the earnings. And full disclosure, all you guys in my Patreon know, by the way, if you want to join my Patreon, that's linked down below. I bought Facebook on this dip. I bought it, I think, 3 different times. So I initiated a position at 248, bought more at 238, bought even more at 218, and now I'm looking to buy more Facebook in the low 200s. I'm talking 200, 205, maybe 210, and if it gets under 200, you bet you know what, I'm going to be buying more Facebook. So that's the news we got from Google, right? That's the news, and this type of change could affect stocks like Snapchat. And you can see here, let me pull up Snapchat stock. Last time I checked, it was down, and it's still down about 4%. What other stocks might be affected? Maybe Pinterest. Pinterest is barely down 0.8%. Maybe Twitter. I don't even know. Let's see Twitter. Twitter's down 3.5%. So look at these stocks, guys, over the next couple of days. And, of course, Google, which is my favorite long-term stock. I really don't have any problems with this move. I'm still going to be buying Google. In fact, I also bought more Google today at about 27.07. And like I've mentioned a lot on this channel and on Patreon, Google is a position that I want to build out even more heading into the split. I don't want to go overboard and make it a massive position to the point where I own too much Google, but I want to have a big enough position heading into the split where I can do multiple contracts of, covered calls when that time with the split comes around. And maybe I'll do a video on that, in terms of Google, my option strategy with it when the time comes. Let me know if you guys want to see that. Drop me a comment down below. So that's Google. That's the massive news, guys. That is the massive news. And we also have some other stocks to talk about. We have Airbnb continuing its rally. Airbnb's up 4.3% today, trading well above the moving averages. Volume's kicking up. We have a golden cross. They reported great earnings, which we covered in my video yesterday. And as long as Airbnb's above 185, which was resistance in December, I'm thinking the momentum continues. But the second we break under 185, we might be pulling back. So it's a waiting game for me at this point. I'm not going to just jump into it, FOMO into Airbnb now, because who knows? Maybe it does come down. Maybe it does cool off a bit and we could get a better entry point. But then again, the momentum might continue, which is why it's a waiting game. We have to wait and see what happens. This is kind of, I'm taking the wait and see approach with Airbnb. We also had Kraft Heinz report. Kraft Heinz went up 5%, or it is up 5% on the day right now. And again, it's about almost 1 p.m. on the East Coast. They got EPS. They reported EPS of 79 cents. They did revenue of $6.7 billion versus $6.6 billion. So they beat revenue, and they declared a quarterly dividend of 40 cents per share. And I believe, did they cut their dividend during the pits of the pandemic? They might have. Or maybe they slashed it. I don't even remember. Actually, it doesn't seem like they did that. So, excuse me on that. That was wrong. It seems like they've been paying a 40-cent dividend according to ThinkOrSwim here over the past couple of years, and they haven't even raised it yet. Wow. So, that's not good. Whenever I talk about dividends, guys, I always mention how I want to see that dividend increase by the rate of inflation or more year over year. So if they're not increasing it at all since 2019 every quarter, that is not a good sign. especially with the inflation we have right now, which is 7.5% from the way the government tracks it. And we all know that's probably a bunch of BS. It's probably more like 10% plus. So we need to see if we're investing in dividends, which I'm not the biggest dividend investor, admittedly, but if you are, you want to look at not only the dividend percentage, what you're getting today, let's say a 5% dividend yield, but you also want to look at the dividend growth rate, the 5-year compounded annual growth rate, CAGR, it's also known as that. That's what you got to look for. So watch out for that in terms of dividend stocks in general, and keep an eye on KHC here, as I am noticing an inverse head and shoulders on the 4-hour chart. We are now back over the moving averages, so I'm going to just put my alert at $37, maybe $38 on KHC. Let's do that now. Mark is at or above 38. And that's been resistance for months, guys. I'm talking since back in August. So if we break 38 into the 40s, this could really start moving up in a major way. That's Kraft Heinz, ticker symbol KHC. Now, last one, which I guess is a bonus one. If you guys stuck till the end, let me know in the comments that you did. Look at Shopify today, guys. Holy freaking crap. Shopify is down 18%, down $158 a share. And now it's officially, well, I mean, it's well in a bear market. That's no question, considering the all-time high was 1760. Now we're officially down about 60%, which is just ridiculous. And I'm pulling it up here on my Yahoo Finance. The PE ratio right now is, for the trailing 12 months, is, wow, 27. Wow, that is very low. Holy crap, guys. Their market cap's now $87 billion. P ratio is 27. EPS trailing 12 months is $27 as well. So if we do the price, let's do that together. 730 divided by 27. That should give us the PE ratio. Let me pull up my calculator here. Let's see if this is right. Where the heck's my freaking calculator, guys? Anyway, the PE ratio on Shopify, it once was ridiculous. We're talking in the hundreds or maybe even above hundreds. I don't even know. But now the P ratio is very reasonable for the growth. And I might have to do a deep dive into Shopify in terms of making a video for you guys, because this is a stock that I think could be a big buy, especially if it gets down 500, 600. Heck, even here at 720, I might start nibbling a little Shopify. Seriously, this stock is getting bludgeoned. And quite honestly, I think it's a bit overdone. 60% of a drop. That's a bit overdone. So what do you think? Drop me a comment down below. Hit the like button. Subscribe. Make sure to join my Patreon if you want all my buy, sells, call outs, morning update videos, more access to me, all that good stuff. That's on Patreon. Link down below. And get your free money, guys. I'm telling you, literally free money from Moo. Use that link down below. Deposit $100, and you could get up to at least 5 stocks, each of which could be valued up to at least $3,500. So get your money. Link down below. I'll catch you guys in the next video. Peace out.